The shearing cycle and how the elite seize assets. Who's calling in the debts, evicting people from their homes, driving them into poverty, and forcing them to spend their lives repaying loans? Who pushes everything to a peak, causes a collapse, then scoops up the leftovers, stocks and assets of bankrupt companies at bargain prices? It's the banking elite, the less than 1% who operate behind the curtain of the state. The rich only get richer. This is their game. Manipulating cycles through inflation and contraction. What they really collect are homes, land, time, and labor from those at the bottom of the pyramid. People who don't understand the rules, who don't grasp finance. These people will toil away their whole lives to repay debts, not realizing they're playing someone else's game. This is how the game works. Interest rates and the flow of money are the bait to hook the masses. Cash is only a tool. It's never been the goal. Real assets are land, property, labor, time, and freedom. Your worldview shifts the moment you realize de-state refers to the deep state. There are no sides, no factions. People only know what they are allowed to know. Suppose all these events are orchestrated, even the so-called black swan events. Welcome to the path to prosperity, where truths that society doesn't want you to know will be revealed. Today, many believe that the US is the most powerful nation on Earth, followed by Russia, China, Germany, the UK, France, and that their presidents or prime ministers are among the most powerful people in the world. But in reality, they are just employees. Their nations are merely playgrounds for the great dynasties behind the scenes. These dynasties control finance, resources, politics, economies, and societies across the globe. They have the power to reshape governments. If they want someone to become president or prime minister, they can arrange it. Hard to believe? But the essence of all events, in over 190 countries, boils down to 5 words: public debt, tax, inflation. Understand these 5 terms correctly, and you'll be able to explain every major political and economic event in any country. Let's dive into how the elite take your money. The steps they use to seize assets and create economic recessions are surprisingly simple. I'll explain in the most accessible way how their money-making system works. First, understand this. One person's spending is another person's income. Step 1. Through the banking system, the elite lower interest rates to stimulate economic growth. Businesses and individuals then mortgage their land, homes, and future labor to borrow from the banks for expansion and investment. As borrowed money floods the market, the economy gets a boost. With capital in hand, businesses ramp up production and people invest. The economy grows, jobs are created, people earn and spend, and companies make profits. This is the first phase of the shearing cycle. A concept clearly explained in a documentary I believe was called Capitalist Love. As collateralized assets rise in value, people borrow more at low interest. But once the economic bubble inflates and inflation spikes, we reach the peak. Then banks start raising interest rates to curb inflation, forcing businesses and individuals to repay debt. Businesses that can't meet debt obligations sell off assets, shut down infrastructure, and lay off workers. Unemployment rises. People lose income and go bankrupt. The bank seizes properties. Those who mortgage their homes or land but can't repay must now trade their laborers to make up for it. The economy then slides into recession. Once inflation is under control, the cycle starts again. Banks lower interest rates. This loop never ends. Look back and you'll see. In each inflation cycle, real estate prices soared. In just the last 20 years, prices have multiplied several times. The devastating force of inflation becomes obvious within this vicious cycle. If you don't understand it, you'll remain a slave forever. Only those who understand the rules and can anticipate the future can ride the economic waves alongside the elite. Do they feel any remorse when 170,000 families in the US lost their homes in the worst financial crisis in history? The answer is no. The Fed is responsible, and they will keep doing it. They won't stop until the world is drowned in the US dollar. Behind every war, pandemic, or terrorist attack lies a goal and a plan: to crash economies, acquire assets on the cheap, and bankrupt national banks. The true nature of the stock market. Banks created the stock market not just to manage debt risks, but as a powerful profit engine. So why did banks create stock exchanges? First, to control indebted companies. When a company owes too much, banks can pressure them to go public, IPO, to raise capital and repay loans. Public companies are more transparent, and banks can monitor their finances easily. If stock prices rise, companies can raise funds without borrowing more. But if stock prices fall, they're still burdened with debt. And if prices drop even after artificial inflation, then too bad, no one's coming to save them. Second, double profits, monitoring and profiting simultaneously. Banks can buy cheap pre-IPO shares and sell them at a higher price once the stock lists, profiting immediately. If the company goes bankrupt, banks still win by collecting underwriting fees, interest, and various financial charges. Third, the stock market is a money printing machine for banks. They create products like margin lending, repo agreements, and pricing tools, all fee-based. Controlling large cash flows, they can easily manipulate stock prices. In good times, they offer margin loans. In bad times, they tighten credit and profit both ways. In conclusion, the stock market can collapse at any time, but banks always win. Only small retail investors are playing someone else's game. The rules are tilted in favor of the banks. Retail investors must stay sharp to avoid being drawn into this trap. Now, do you get it? Just look at the string of fake billionaires in recent years. Many got rich by manipulating stocks, only to end up behind bars. These so-called billionaires specialized in borrowing money, inflating valuations, and disappearing. Step 1. They borrow money to build a sham million-dollar company. They take loans from banks or investment funds to launch companies in trendy fields like technology, AI, renewable energy, or e-commerce. They don't need real products, just a shiny, promising future to pitch. Step 2. Media hype inflates perceived value. They pay for media coverage, hire influencers, and flood the news with tales of their visionary leadership. They hold flashy fundraising events and show up everywhere as investment geniuses. Early investment funds help drive up the company's valuation. Step 3. Go public and create screen-based billionaires. The company's IPO is priced sky high, and shares skyrocket thanks to the hype. Small investors rush in to buy. Step 4. They cash out before the bubble bursts. Once the stock hits its peak, The billionaire quietly sells off shares and walks away with cash. Small investors keep buying, thinking prices will keep climbing. Step 5. The bubble bursts and investors are left holding the bag. When the company stops making real profits and public trust vanishes, share prices plummet. The billionaire has already left with the money. All that remains are worthless stocks and investors who believed in a dream. Real estate, the biggest economic trap of the century. Have you ever looked back at real estate prices 20 years ago in Central California? A house back then cost about $500,000. Now, even $1.5 million might not be enough to buy one. Prices have more than tripled in 20 years. So what will the future look like? But don't rush to think it's just because land is scarce and prices naturally rise. That's only the surface. In reality, this is a sophisticated economic game played by banks, corporations, and the people. Real estate is actually a game for the giants. Real estate is not just about buying and selling property. It is a powerful tool to manipulate the economy, launder money, and control assets. The authorities direct land policies and decide the market's fate. Banks pump money, manipulate credit, and tighten loans when needed. Real estate companies hoard land in advance, inflate prices, sell at the peak, and launder money. And the people, the last ones, rush in to buy land at the peak price and carry debt for life. Why have house prices more than tripled but people remain poor? Real estate prices have skyrocketed, but most people cannot get richer. On the contrary, they become poorer. Why? Because of inflation. Imagine you are playing a game where your earnings grow only 5% a year, but the prices of items in the shop rise 30%. You work your whole life, but still can't afford a house. Meanwhile, the players just need to show up with money and can immediately buy a mansion. Why? Because your money is from your salary and business. Their money is from assets. The rule of the game is, if you have assets, land, gold, or even stocks, you win. Because your assets increase in value with inflation. If you only have cash and a monthly salary, you definitely lose. Cash loses value every year, while salary increases, crawl along like a turtle. Ultimately, this system is not made for you. You work hard, save every penny, while the rich and banks hold land and watch house prices double every 5 years. You think you're trying to buy a house? Sorry, you're just competing with impression. The rich get richer, the poor stay poor, because this game is designed that way. The future of real estate. Will prices keep rising, or is the game over? The reason house prices keep rising is that society cannot allow them to fall because the financial system depends on real estate. Money from the rich banks and investment funds continues to pour into the market. Population grows, but land stays the same. When supply is low and demand is high, prices go up. However, the true reason for skyrocketing property prices is not simply more people, but limited land. China even has ghost cities. Completed cities with no residents, left empty and abandoned. Tens or hundreds of thousands of apartments sit vacant. The key point is that house and land prices have jumped many times over just a few years. The reason lies in inflation. Land stores inflation, stores money, and controls the flow of money. So, who is controlling the game? The government and central bank have 3 magic tools to steer the economy. First, monetary policy, including interest rates, money supply, and credit. Second, fiscal policy, including taxes, public investment, and asset control. Third, managing exchange rates, gold and foreign currency, controlling the flow of capital in and out. The goal is money flows in, prices rise there. Money flows out, prices fall immediately. In the end, the money stays in the system. Only it no longer belongs to you. Watch how they play. If you know how to play, follow the money flow. Know where money enters and leaves. You will know how to make money. Stage 1. Recovery. Setting the stage. The media will complain. The economy is still difficult, still weak. But actually, money is gradually pumped into the system through banks, bonds, and public investment. Keep savings interest rates high, but do not sharply reduce lending rates. The goal is to keep people depositing money in banks, creating a large capital pool. When banks start to fill with money, it will be easier to pump credit later. They attract money to banks first, preparing resources for the next credit injection stage. At the same time, keep exchange rates for gold and USD stable to prevent money flowing out. Results: stock market. Only the big players quietly accumulate cheap shares. People have little information because the market is still cold. Real estate still asleep, but speculators begin to watch carefully. Gold slightly up as people worry about inflation. Bank deposits still high due to attractive interest rates. Signs to watch. The government starts talking about recovery signals. Banks secretly loosen credit, though not publicly. Investors quietly accumulate assets, but the market surface remains calm. Stage 2. Growth. Pumping money and raising prices. The media loudly proclaims, "The economy is recovering strongly." Anyone who does not invest now will miss a once-in-a-lifetime opportunity. Lending rates start to drop sharply. Banks become more lenient in granting credit. The media constantly spreads news. The market is booming. Not investing means falling behind. Now is the time. The goal: push money from banks into asset markets. Stocks, real estate, businesses create a FOMO effect. Attract as many people as possible. Results: stocks soar. Everyone opens accounts and trades. Real estate explodes. Even vacant land prices rise. Gold temporarily loses appeal. Bank deposits drop sharply as people withdraw money to invest. Signs to watch. Everyone is making money. Even vegetable vendors talk about stocks and cryptocurrencies. Banks lend money easily for investment and home buying. The media calls this the golden opportunity. Stage 3. Recession. Retrieving money, interest rates begin to rise. But the media still says, "It's fine, it won't collapse, just keep investing." Credit tightens quietly. No one says it directly. But borrowing money becomes noticeably harder. The local currency exchange rate becomes tense. The government holds on to foreign currency reserves to protect the currency. The goal: gradually reduce liquidity to avoid shocks. Results: stock market liquidity worsens. Bad news appears more often. Real estate starts to cut losses. Transactions decrease. Gold rises again. People pull money out to the market. Bank deposits increase again. Signs to watch. Banks hold on to money. Loans are harder to get. Many real estate listings appear with loss-cutting sales. Securities companies reassure. The market is still good. Stay calm. This is when the market prepares to fall sharply. Stage 4. Crisis. System cleanup. Interest rates rise sharply. Money flow is tightly strangled. Capital outflow is banned. Gold and USD are strictly controlled. The goal: stabilize the banking system. and save the economy from a total collapse. Results: stock market crashes, liquidity is clinically dead. Real estate investors caught at the peak, holding losses, selling cheap, but no buyers. Gold continues to rise strongly as everyone looks for shelter. Bank deposits rise again as people panic. Signs to watch: media talks about a global crisis. People line up to withdraw money. Gold becomes scarce. The goal: stabilize the financial system and prepare for a new cycle. Do you now understand the economic financial cycle of society? Please comment below to let me know. The most important thing is not what you invest in or how skilled you are in any field, but that you understand the economic cycle. Because every type of asset has a cycle, with phases of price pumping, peaks, bottoms, and crashes. Understand this to survive. If you find this podcast episode interesting and useful, please don't hesitate to give it a like, share, and subscribe. The upcoming episodes in the path to prosperity may help you even more.